Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks wavered on Tuesday as investors weighed the likely fallout of President Trump's latest tariff blitz and the US government careening towards its first shutdown in 7 years, and stocks were largely mixed. We had a couple of winners, a couple of losers. Such goes the market. We saw financials you could see was the epitome of today's trade. Berkshire, Visa, MasterCard outperforming, the insurance names outperforming as well. But then everything else was actually very red here in the financial space, really taking it on the chin. However, Nvidia, helped the market pare a lot of its losses today, along with Microsoft. Both stocks were up 2.46% and 0.42% respectively. Some of the other mega caps didn't fare so well. Google and Meta were down in excess of 1%, along with Amazon. Tesla was slightly down, kind of flat. Apple was down half a percentage point. And then healthcare was the standout sector here today, really moving on the back of some news from Donald Trump. We'll talk about it a little bit later on in the video. You can see that most sectors did gain, but they weren't massive gains. Most sectors were like trading at the flat line. Real estate, the S&P 500 itself, utilities, materials, technology, right? These were all slightly up, nothing crazy. The best performing sector was healthcare. But if you remove healthcare, right, Staples was only up 0.42%, industrials was only up 0.36%. So even though we did get a number of green sectors, it was nothing crazy. There's a lot of churn going on in the hood, especially when you look back at the heat map. We did have a couple of losing sectors. Small caps were down 0.66%. The discretionary space, financials was down 1%. Energy was down 1.58%. And that was the worst performing sector here today, along with communication services, which was down 0.13%. You can see a mixed day through and through. Large caps on the back of Nvidia and Microsoft were green. Large cap growth on the back of Nvidia and Microsoft were kind of green. Large cap value was down 0.28%. Core was down 0.67%, and then mid caps and small caps fell through and through. But again, not a disastrous day. I mean, small cap value, sure, but the market is simply just churning underneath the hood after what has been a pretty spectacular 1 to 2 weeks of trade over the last month or so. Looking at the economic data, this is probably why stocks were churning. We got some mixed data when you look at the conference board, consumer conference, that came in well below expectations, 94 versus 96. But then we also look at the JOLTS opening. This is the latest update on September, and this could actually be the last labor market insight from the BLS for some time. The report showed job openings rose more than expected, hiring slowed, and layoffs dropped too, consistent with the low hire, low fire market that has taken shape in recent months. You could see at JOLTS openings 7.22 versus the 7.2 million consensus. And then the Chicago PMIs came in well below the market's expectation of 40.6 versus the 43 expectation. But the big news today is that markets are bracing for a government shutdown after Trump and the Republicans met with Democrats in the Oval Office on Monday, but failed to strike a deal to avert a halt to funding. I think we're headed to a shutdown, Vice President J.D. Vance said after the meeting. Lawmakers have until midnight Wednesday to reach a last gasp agreement or see the first stoppage since 2019. Odds of a shutdown are near 93% according to Polymarket. For Wall Street, the concern is that the government's economic data releases will halt during the stoppage. The BLS, the Bureau of Labor Statistics, will completely cease operations if it happens, the Department of Labor said, likely delaying the release of Friday's non-farm payroll report, among other top-tier data crucial to the Federal Reserve's policy setting. So, looks like we might not get an NFP report on Friday if the government shuts down, but we have until midnight tonight to see if that happens. Betting markets are telling you it's very most likely will happen. And then in other news with regards to Trump tariffs, Trump sent out a fresh flurry of tariffs on lumber, timber, and certain types of furniture late Monday, hot on the heels of a threat of levies on foreign-made movies and last week's plan to put 100% duties on branded drugs. Concerns are growing about the impact that this may have on certain sectors. However, it looks like Taco Trump is back. after the pharmacy giant Pfizer and the Trump administration announced a massive agreement. The company called it a historic agreement with the White House. In a release, Chairman and CEO Albert Bourla said that this will enable greater investment in the U.S. biopharmaceutical ecosystem by ending the days when American families alone carried the global burden of paying for innovation. Americans will be able to buy from a direct-to-consumer website called Trump RX. Pfizer said the medicines will be at a significant discount of 50% on average. It is the first company to join the agreement, but more companies are expected to join the initiative after the president sent out 17 letters to companies back in July. Pfizer will also have a 3-year reprieve from tariffs, and Pfizer was up 6% on this news. Healthcare was the best performing sector by far. You can see a Pfizer up 6%, the whole sector up about 2.5%. The market really likes this news. Nvidia was up 2.39% and today hitting fresh intraday record highs as CDC's AI capex hitting $2.8 trillion. And then CoreWeave was up 11% today after it announced a $14 billion deal with Meta for GPU infrastructure. And then UiPath was up 20% at one point, up about 7% on the day after announcing a deal with OpenAI for agentic automation. For those of you that don't know, UiPath is actually a competitor to Palantir's AIP and their foundry. So we'll see where this takes us. I've seen a lot of buzz on Twitter about this stock. Might be time to actually buy and see where this takes us. And then for everything we saw today, it was 2,300 advances, 3,900 decliners. So not great market breadth here, guys. We saw outflows in the NASDAQ 100 and the New York Stock Exchange. The S&P 500 largely flat today. Market momentum continues to stall. Here, the 5-day and 20-day below the 50% mark, but everything else looks very, very strong. And this is still telling us that the momentum is still on the side of the bulls, especially in these longer term moving averages. Now, guys, looking at the charts today, you can see very mixed price action here in US equities. Large caps kind of flat, slightly green. High beta, the Russell 2000 is down 0.43%. The equal weighted S&P 500, actually one of the best performing indices today. Mid caps and small caps somewhere in between. Growth and value gain today, but this is just for the S&P 500. Futures looking all right. Mixed price action in international indices as well. India and China fell. European stocks and Middle Eastern stocks gaining, with the ISRA ETF up 1.36%. Crypto falling. Bitcoin down 0.5 percentage point. Ethereum down 2.4%. But again, holding key levels. I said that every single video. And volatility was flat. Mixed price action in the yields market. The 2-year fell, 10-year yield gained despite what we saw with the government shutdown. The dollar's falling, and that generally happens into a government shutdown. We see weakness in the dollar. And then in TLT bonds, the 20-year treasury was down 0.42%, and then gold and silver was up. And again, I think we're seeing this type of trade into gold and silver lately, or at least in the last week or so, due to government shutdown concerns. Remember, gold is a safe haven, and when you're going to get a slide in the dollar, you're going to see gold outperform. Now, looking at the S&P 500, guys, and in about 20 minutes, the quarter will be officially done for the S&P 500, the third quarter of the year, and we will be going into the final quarter in what is normally a very bullish time for the S&P 500. But we normally do see a little bit of churn in October. We see a pretty strong first half. We see a pretty weak second half, and then we see November and December really move the rally forward. In fact, those last 8 weeks of the year is really when stocks begin to rally. Now, looking at the daily chart, right, we can see that stocks continue to trade at these highs right here. I mean, even after last week's pullback, right, to these lows right here, we literally put in a higher low relative to this low right here, and we are trading back at these all-time highs right here. I mean, not even a government shutdown can shake this market. Stocks are so resilient right now. But you know my goal with stocks. If we do get a pullback, even to as low as the 6,300 area, we are buying dips, looking for a Q4 end of year run, potentially a run that can expand into the first couple of weeks into 2026 as well. The same is true here for the NASDAQ 100. You can see the NASDAQ 100 looking very resilient, higher highs, higher lows into pretty much all-time equal highs, as you can see right here. The Russell 2000, churning a bit. This is an all-time high. Don't get me wrong, guys, an all-time high, by the way, but we are churning. But again, all of these indices are trading at all-time highs. The RSP, right, hit an all-time high right there, trading at pretty much all-time highs. When you look at mid-cap 400 index, right, here we can see we are a little bit down right here. You can see we are off those highs, but those highs being a new all-time high. What's new? And then the same thing for the S&P 600. This is an all-time high for all of these indices. And there's what else? And there's nothing And there is not much to hate about US equities in aggregate. So all in all, guys, if we do get pullbacks, right, if we do get pullbacks to key support levels, for example, the S&P 600 right here, the key support level would be the 1378 and possibly as low as the 1325 level. We get pullbacks to there, buy those dips. And I think you really want to be looking at small caps. You really want to be looking at mid caps. For example, a stock I think that you can really take advantage of the momentum is something like UiPath. They just released their agentic automation Maestro software. I think ultimately we did see a 20% move to the $15 area. We did pull back. I think we're going to hold this gap. And I think really at the $13 mark right here, this is where you can buy a small cap stock in the AI space that's really going to move the market. Another small cap stock that I really do like is Iris Energy. This is a AI infrastructure play. They're converting a lot of their Bitcoin mines into just AI infrastructure data centers. You can see they've gone on a spectacular rally. I still think the stock is cheap. And I think if you can get the stock somewhere below the $40 mark, let's say we do get a pullback, right? This is definitely where you want to be. I think in the energy space as well, EOSE, another absolute runner. But I think if we get a pullback to the $9 mark, this is probably a $20 stock sometime in 2026. But those are just some of the high beta names I would look at. I also recommend keeping a small portion of your portfolio to cryptocurrency. We could see that Bitcoin putting in a high low relative to this low right here, and we are moving. It's a slow grind up. Ultimately, what the bulls need to do is go ahead, retake these highs. If we can go do that, it would be a higher high in the context of a higher low. That tells us that it's probably more upside, and then we can go ahead and retake these highs. However, if we begin to store right here, then we're literally in the process of putting in a high, lower high, and then that could mean more downside here for Bitcoin. So bulls, do your thing. But we did see quite a bit of buying. You can see this wick right here. The bulls definitely are taking us from the lows. The same is true here with Ethereum. Not quite as strong buying, but we are seeing a little bit of a wick, a little bit of buying coming into the market. But Ethereum continues to remain above this 4,000 area. It is holding the 4,000 area, and that is ultimately the line in the sand. Constructively, I am bullish above the 4,000 level for Ethereum, looking for an end of year price target close to the 6,000 level. Now let's look at some of our other proxies as we enter this US government shutdown. If we do actually get a shutdown, I expect the dollar to probably trade back to this $96 area. This is the DXY, so we're going to see some weakness in the dollar. I'm not really sure what yields are going to do with regards to the shutdown. I think yields don't really do much of anything. So I think we're going to see this type of mixed trade, but we all know that rate cuts are definitely coming. Rate cuts are on the table. So do expect the 2-year yield to probably continue to move lower into the end of the year. I just don't know what the near-term government shutdown is going to bring for this. I think the 10-year yield is also going to continue to drift, but we can see quite a bit of volatility, and that volatility will make its way into TLT. But you can definitely see we've put in a low right here, a multi-month low right here, and we are starting to move up. Ultimately, if you are a TLT bull, if you want to get some allocation to bonds in your portfolio, you really want to see some of these highs getting taken out. If that is the case, we can then open up a $100 TLT in the future. And then quickly looking at gold, I mean, you can see why gold is rallying with the government shutdown, with inflation. And then ultimately, that government shutdown is part of the reason why gold is absolutely rallying. There's a ton of other reasons with regards to inflation, monetary policy, fiscal policy, the fiscal cliff that the world's heading into, as well as rate. All in all, gold is absolutely rallying, and it's showing no signs of stopping right now. Look, if we get a pullback to the 317 area, if we do get a pullback here, which would be a pretty big pullback, but if we do get a pullback, right, this is the opportunity to go ahead and buy. If we actually just take a measured move from where we are, it would be about a 10% pullback, which isn't crazy. I mean, gold definitely has that type of move in it. You could see from here to here, from peak to trough, right, we did pull back about 8% in early 2025. So it's definitely possible. But this right here is a technical breakout. And if gold does pull back, find support right here, that would just be an opportunity to buy, looking for 400 GLD in the future. But all in all, guys, stocks look really, really good. And ultimately, I think any dips in any of these assets, right, you just want to be buyers of them. I think the best value right now is definitely in crypto. But if we do see, 5 to 10% pullback in the S&P 500, the NASDAQ 100, even some of these indices, right, buy those dips, buy those names, buy some of those small cap names, and maybe even add some gold and silver to your portfolio, because everything looks like it's poised to go higher right now. Guys, and diving into sentiment, we are back in the neutral zone from the greed zone last week, although closer to the greed zone right here. And this essentially is telling us that things aren't overheated, things aren't euphoric, but things aren't bearish either. And in the market environment that we're in right now, where earnings are growing and rate cuts on the table, this type of sentiment right here is simply just fuel for the upside. And when we look at seasonality, that upside could come as early as this week, because the first half of October is actually one of the most bullish 2-week periods in the S&P 500 for the year. The first half in October normally sees gains of about 1.25% on average, and it's again one of the best weeks ever. So we could potentially see, a strong rally into the first 2 weeks of October. Don't discount that fact. And what also could be supporting the rally is buybacks. Executed S&P 500 buybacks is now greater than $1 trillion year to date. Absolutely insane to see this figure right here. And this is part of the reason why stocks keep rallying. There is a corporate bid underneath the market that keeps this rally moving higher. And also what's helping the rally right now is the macro. When we look at GDP indicators, they are frothy. This is what running it hot looks like. 3.9% for Q3. This is the GDP estimate. Now, there are a couple of macro risks. One of them is a government shutdown. But when we look at prior shutdowns, it had very mixed financial effects on the market. As you can see right here, the 10-year treasury yield was very, very mixed. Sometimes it rallied, other times it actually moved lower. The S&P 500 generally drifted higher. The US dollar generally moved lower. So again, mixed price action through and through, but all in all, it does look like markets in general should move higher on the back of a mixed yields and the dollar actually moving lower. And all in all, that's actually a good thing for equities, especially for the US market. Again, mixed effects, but we'll see how it pans out. Looking at the earnings calendar, we have Nike and Paychex tomorrow. And then with regards to data, we have a couple of big things. Most notably is the jobs data, JOLTS, the job openings and labor turnover survey. We're looking for a 7.1 million figure right there. We also get the conference board, consumer confidence, a couple of Fed speakers, and the Chicago PMI. So a lot of high impact data coming tomorrow, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.